And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning, welcome to the show. It is, of course, Wednesday, hump day, as we get geared up for a couple of big reports coming up here today after the bell. Nvidia, of course, all eyes will be focused on that one report for really the shape of things to come in terms of AI. So a lot of pressure on the CEO of Nvidia today to deliver a really stellar report. Now, it's not going to be the earnings so much that they report today. Whether or not they meet or beat earnings estimates is certainly going to be a concern. But it's going to be all about forward outlook. What about DeepSeek? What's that mean for AI spending? What does that mean for the demand for GPUs, et cetera, that are driving the whole AI age? So again, after the bell today, that's going to basically move the markets today. So whatever happens today in the market is going to be completely changed by tomorrow. So I wouldn't read a lot in today's action. We're going to talk a little bit about that in a moment, how we finished up the market yesterday. But again, don't really put a lot of weight on that. Friday, of course, PCE, that's the new inflation report. That's the one inflation report. So while the market tends to focus on all the chatter, focus on CPI and PPI, Fed doesn't even care about that much. Yes, they consider it, but it's PCE inflation. That's on Friday. That's the Personal Consumption Expenditures Index for inflation. They look at the mean trimmed estimate of PCE. So that's really the estimate that drives monetary policy. That's expected to come in a little bit weaker than the previous read that we've seen in the last report. So again, we'll see how that goes on Friday. Of course, that should also, that will weigh on markets, of course, because that'll dictate, is the Fed going to cut rates or not? What's going to happen? Also drive the bond market as well. Speaking of inflation, I was yesterday I did an interview with Charles Payne on Fox Business. And so while I was in the green room waiting to go on, they had the funniest segment on Fox Business. They went to a reporter, and he's at his house. So they're at this reporter's house, and he has a chicken coop in his backyard now. And he's talking about eggs, the prices of eggs, right? And so there's, necessity is the mother of all inventions. And so a company has now come out with Rent-A-Chicken. You can rent a chicken coop, and they bring you the coop and 2 chickens and all the feed for 6 months, and it costs you $500. And so in the middle of this interview, he drops the chicken. The chicken bites him, so he drops the chicken. And then he spends about 5 minutes of this interview running around the yard trying to catch the chicken, right? Apparently, he's never seen Rocky when, you chase a chicken to increase your foot speed. So anyway, so the point of this is that I said, okay, this sounds great. $500 for 2 chickens and a coop, right? And you get a dozen eggs a week, right? It's not bad, right? Let's do the math on that for a second. I looked up the cost of a dozen eggs on Google. I just Googled, said cost of a dozen eggs, $6 a dozen, right? So if I get a dozen eggs a week for $6, 4.2 weeks in a month on average, spending about $24.50 a month on eggs, 6 months, that's $151. So I could just go to the store and spend $151 on eggs for a dozen a week versus $500 to rent a chicken. Nobody does math, but guess what? My wife wants a chicken coop. So, and she doesn't care about the eggs. She'll still go to the store and buy eggs because she won't harvest the eggs. She just wants the chickens to run around the yard. So that's it.
And she's going to have great footwork.
Exactly. So, but it was the funniest segment watching this guy chase this chicken around the yard. It was, and trying to do the interview all at the same time. So it was a complete disaster. But anyway, $151 versus $500. You do it if you want to keep chickens at your house. There's a rent-a-coop for it. And again, I love people that are innovative. This guy saw an opportunity. He's like, hey, I'll build this chicken coop. It's a little thing. It's got a back door on it. So you basically, the chickens lay the eggs. You go in the rack to open the back door. You get your eggs out. You're all good. It's got a little fence around it. Just throw it down in your backyard. You're good to go.
Joke's on him.
No, yoke's on you if you don't do the math. But anyway, there you go. So everybody needs to become more sustainable. Raise your own chickens, raise your own eggs. Of course, my daughter was tasked about a year ago. She had a dear friend of hers that they have a big place out in Katy, Texas, and they have a relationship with Tyson. So if you want to raise chickens in bulk, you can contract with companies like Tyson, and they will bring all the chickens, everything. All you got to do is make sure the chickens are okay. They come pick all the chickens up, take them off, etc. Right? So she's tasked with going over to the house and watching the chickens for the weekend while the family's traveling, and one of the chickens dies, and that was a whole traumatic incident for her. So chickens do die. Anyway, here's what you need to know before the bell. It's not about eggs. All right, seriously, here's what you need to know before the bell this morning. So yesterday, the market, I told you, we talked the day before about be careful of these rallies right now. Sell into the rally, reduce risk, whatever you need to do. Yesterday, we took out that 100-day moving average. Now, this is the one thing we talk about stop losses, and be very careful with how you use stop losses in your portfolio. Do not react to an immediate break of your stop loss level. Let it mature. In other words, give it some time to see what happens. Yesterday, we took out the 100-day moving average, and a lot of stop loss levels were triggered, people selling immediately. By the end of the day, the market rallied back above that level and closed above the 100-day moving average, reverting that stop loss. So again, you want to give your stop losses some time to mature. Let them season a bit to make sure that stop loss level is actually taken out. Because again, yesterday we saw some very, very good buying in the afternoon, push the market back above the 100-day moving average, and this morning futures are looking positive. Now again, I would still sell rallies right now if you need to reduce risk and raise some cash. You're sitting right below the 50-day moving average. That's going to pose some resistance today. And then above that, you've got the 20-day moving average. Market is getting decently oversold here, and we've had 4 straight days of selling. So again, we're due for a day or two of rally. Again, that may be very truncated. We may get a rally today, close the market out positive today, maybe move back up towards this 50-day moving average. But then if Nvidia lays an egg tonight, that could certainly weigh on the markets tomorrow, and then we come back and retest or potentially take out that support level. We are in a corrective process. So again, this is going to take a little bit more time for us to work through, but we're on a sell signal. The market is working through a corrective process. We're still trading within a very, very broad trading range. And again, this range runs all the way back to mid-December. But we've just been in a big giant channel here now for about the past 3 months. It's been kind of aggravating at this point because you're not seeing a lot of gains, seeing a lot of rotation within the markets. We've seen value now outperforming growth. We've seen that rotation. We've seen bonds. Actually, if you didn't know this, by the way, bonds have a larger year-to-date return right now than the stock market. So again, been a good rotation into fixed income as well as this kind of risk-off trade goes on. But again, there's nothing wrong with the market here. There's nothing that suggests we're about to go through a much more deeper corrective cycle at this point. We are just in this consolidation process, working off those previous oversold conditions. Now, again, that doesn't mean that we can't mature into a bigger corrective phase. And so we certainly want to watch these support levels. We want to pay attention to these support levels. They are important. But again, at this point, don't overreact and get too overly negative in the markets, because again, there's a lot of stuff here that can drive the market short term. Nvidia after the bell today, up, or that could be positive or negative, and we'll certainly talk about that tomorrow. That could certainly set the tone for the markets over the next couple of days in particular. But again, just use today's rally. If you need to reduce some risk, rebalance ahead of the report tonight, whatever you need to do to hedge your portfolio a bit, certainly probably good advice here. And then tomorrow we'll pick it up from there and see what we need to do next. But that's what you need to know before the bell this morning. We'll be right back, pick up with Danny Ratliff. Got a few topics to get into as well. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. If you're in the chat, welcome to the show. Appreciate it. Follow the rules. Chat house rules. They apply.
It's all about chickens. It's okay.
It is all about chickens. Speaking of chickens, Danny will be answering all questions with interpretive dance today. So,
The chicken dance? I like it.
Exactly.
Let's do it. So you really don't want chickens, though. You know that, right? Like, she may think she wants chickens until... unless you want the eggs, I mean, yes.
Well, no, it depends on whatever she sees on TikTok. So it kind of migrates between chickens, miniature goats, and ducks. So it just depends on the TikTok of the day. So
have you ever seen those fainting goats?
Yes, those
are fantastic.
She wants one.
I want to get one and put it in a buddy's yard. He's like, "What is this?" Pulls up and thinks it's dead. You know?
Yeah,
I mean,
exactly.
It'd be great.
It'd be great. Danny's hiding in the bushes just to spook it so it falls over at the right time.
It's gonna be glorious. What is she listening to the show?
No, she doesn't listen to the show.
She needs to do what we talked about the other day, or you need to do.
Okay, what's that?
Well, you just create that Facebook page or whatever page it is. And
wait.
subliminal messaging
We have to tell this to chat because Danny actually had a genius idea the other day, which is, look, anybody that's been married at all knows this to be a true story, is that if you tell your wife something that you know for a fact to be true, right, she won't listen to you. But if she hears the exact same thing from a girlfriend or from somebody else, it's gospel, right? So Danny came up with this idea that we create a fake Facebook page and that you can all subscribe to, and you send us whatever the topic is that you're trying to tell your wife to do, whatever it is, right? And then we will create a fake profile of a male or a female or whatever it is that will answer her in her feed and say, this is what you need to do, even though it's the exact same information that you just told her.
It doesn't even need to be like answering. It just needs to be put out there.
Yeah, just post out there. It's like, hey, want to lose weight? Exercise, whatever. So,
Michelle, I have not done this. I know you are listening. Well,
he has so done this.
You know, maybe every now and again you get on their feed and just jack with the algorithm a little bit.
Exactly.
Why does this keep coming up? I don't know, babe. Weird.
Yeah, whenever there's Christmas or something rolling around, I just walk by my wife's phone and go, new gun, ammo. And then she starts getting all these posts on her.
Then you start specifically saying exactly what it is later. It's like,
it starts coming up exactly. Yes. Anyway. All right, we got stuff to get into. Important stuff to get into this morning. I'm actually not quite sure. So we talked a little bit about tonight, of course, is Nvidia's earnings. The big outlook there is going to be their focus. There's been a couple of kind of events that have occurred over the last few weeks. One, you had DeepSeek, and that really kind of brought in this whole, well, maybe we don't need to spend as much on AI to do this. And of course, once you dig down into DeepSeek, you find out that they use 15,000 GPUs from Nvidia to actually build it. So it didn't cost $5 million. It was a couple of $100 million to build it. But that's the story you find out kind of after the fact, after the shock. Then of course there was an article out this week talking about, well, Microsoft is cutting back on their spending on data centers. Well, Microsoft came out, refuted that story, but you don't know what's true, what's not, right? So the market's been trying to digest through that. But again, it's all this question about the need for data centers. How much of this data center capacity do we need? Of course, why is the data center important? Well, that's where all the GPUs are that NVIDIA sells. And, Tesla is a good example. They built out a data center with 100,000 GPUs. They did it in record time. But it was a lot of purchasing of GPUs from NVIDIA. So what's going to be critical tonight in terms of their outlook is not going to really be so much earnings. They're going to meet or beat earnings estimates by a penny. They're going to meet or beat revenue by a small, a few $100 million, right? This like we expect $3 billion in sales. It'll be 3.1 billion or 2.9, right? That'll certainly be important, but it's going to be all about what they say about the future. Has there been a shift in the demand for data center build outs, for GPUs, for those type of things? If they say that has downshifted, that's going to be problematic for the stock. So again, and then that's going to be problematic for everybody else in the AI space. So again, everybody's kind of hanging on right now for NVIDIA's announcements tonight, and we'll have to see what happens tomorrow. But the question becomes is, as is always the case, is AI going to be what everybody slates it to be? Is it the next invention of the internet, right? Which, if you go back to the late 90s, when the internet was just coming out, everybody says, oh, it's a fad, it's never going to stick around. And, here later, it's internet's in everything in our life, right? But even back then, we had to go through a cleaning phase of all the .com companies, right? We had to get rid of all the trash and wind up with the companies that were going to dominate in the internet space, which it took time to get there. And we went through a severe correction. A lot of companies went bankrupt. Even Apple lost 80, 90% of its value back then, even though it's come back since then. Cisco lost 80, 90% of its value, has come back. But we're gonna go through that cleansing process in this AI space, and then of course from that process we'll find out who the winners are going to be in AI. Is it NVIDIA or is it somebody else? That's yet to be seen. But this, I don't want to make the comparison saying that this is very similar to the .com bubble. There's a big difference. This time the companies that are in the AI space actually make money. Versus what we saw back in the .com era. A lot of those companies didn't. They didn't even have a business plan. There are differences, but the point is that AI is not going away. It is something that is coming. It is going to be very integrated into our lives. We've talked about the Internet of Things before, where everything you have now is getting connected to the internet in some way. I mean, it's just a good example is, just my garage door opener links to my phone, my irrigation system for the lawn. It links to everything you buy now, has some link to your phone. Whether it's your refrigerator or your Roomba, whatever it is, it all links to the internet. AI is going to be like that in the future, but the question is what companies are going to dominate that space, and will those be the same companies that we're investing in today, or are they going to be whole new companies that haven't even been born yet? And it'll probably likely be some combination of both. But again, that's going to be a function of development as we start to go forward and pay attention to it. But anyway, tonight's going to be such a very important report from Nvidia. This is kind of like the Super Bowl moment for Nvidia, and there's a lot riding on tonight's report in terms of AI and the whole kind of space in general.
Do you think that the past numbers are going to be more important, or
no outlook?
Yeah,
forward
guidance.
Yeah, that's all that's going to matter.
Yeah.
Because then the reason for that is because the market already knows what the past numbers are. Within
reason.
They are pretty close, right? They'll be very close to being accurate. But yeah, it's going to be all about the guidance, because we've heard nothing from Nvidia since DeepSeek came out. They didn't come out and immediately refute DeepSeek. We didn't hear anything from the CEO about DeepSeek to any great degree. He hasn't been in the press lately to any great degree. When the Microsoft data center issue hit, we didn't hear anything from Nvidia. So he's been very, very quiet over the last really kind of 2 months, which is also kind of makes me nervous.
Kind of odd, right? Because he's been on a soapbox for so long.
Yeah,
I mean, out in the open, and then he has been eerily quiet.
Yeah, and part of that may be due to blackout, right? That he doesn't want to say anything going into earnings. But again, this is going to be a very widely covered, more so than just about any other company tonight. That's going to be the thing.
Oh, yeah. So what do you think about the competition? You mentioned, obviously it could be companies that aren't even there, but, we talked about this the other day in one of our investment meetings was, it typically takes about 4 years to see, companies really kind of ramp up and catch up with competition. Mm-hmm. Has that changed with AI? No. Is it quicker?
Oh, everything's moving faster.
Yeah.
Now. I mean, and you take a look at John and I were talking about private equity and private investing yesterday. You take a look at the amount of money. Private equity has over $1 trillion of capital to invest. And so they are rapidly moving money into development areas of artificial intelligence. That's a big driver for them right now. Because again, if you can catch the company, right, if you can bring a company to market that is take it from private to public, and they are the company that is going to, everybody's looking for the next Apple, right, or the next Amazon. That's the
needle in the haystack.
That's but that's the race with private equity. Is I saw a pitch deck yesterday of a private equity company that only specializes in technology, and everything they're investing in right now has some function related to AI in just about every asset that they're invested in. So lots of money going in that space.
Well, it makes sense. I mean, you think about where the world is going, and that's exactly the space.
Yeah, exactly. So, all right, we'll come back. Interesting development. Inheritance tax is one of those issues that, when you pass away, I had an interesting email. And it actually kind of brings to the point about inheritance taxes and how to potentially avoid that. So we'll talk a little bit about the email I got and then, kind of go from there. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your question about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
So today's earnings announcements are making me hungry. We have Cheesecake Factory, followed by Wingstop and Toast. I've got a craving for toast and wings right now, and
Toast
some cheesecake.
and wings.
Toast, wings, and cheesecake.
The Real Investment Show podcast.
What diet are you on right now?
Don't eat anything and work out like a fiend. So
Yeah, how's that working out?
It's working out great.
Oh, you
I've
sure?
lost 4 more pounds, so I'm down.
That's it?
At realinvestmentadvice.com.
I didn't have that much to lose to start with.
I don't know.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So I got this email yesterday. It's interesting, and I run into this a good bit when it comes to, people that are investing their own money. And, so I get this email talking about, large sum of money that he's personally investing, kind of do-it-yourself investor, has been managing his money his whole life. He's a fundamental guy, very smart. And so we're kind of just going back and forth kind of by email, just talking about investment strategies, risk mitigation, that type of stuff. And he's like, well, it says, at some point I'm probably going to, kind of hire an advisor to maybe, help because I'm not going to, live forever. And I'm like, well, that's a really good point. And one of the problems that you're going to face is, potential estate issues, right? So that, if you're not prepared when you pass away, this is the one thing that, a lot of people don't realize is that if you don't properly prepare your estate, right, have your wills, your trusts, things, and especially when you have a large sum of money, you can lose up to 70% of your assets to the government through estate taxes and inheritance, just taxes out the wazoo, right? So there's a lot of planning that goes into that process, and you really need to start thinking ahead. Don't wait till the last minute to do some of these things, because the estate planning process is not something that's easy, but you can mitigate a lot of those risks at the time of death. And again, if you've ever been through a family death where they weren't prepared, they didn't have a will, they didn't have, anything in place, there was no spot where all the financial records were kept, and you have to go in there and try to sort all this stuff out, go dig through documents, trying to track stuff down, trying to find where bank accounts are. It's a terrible nightmare. It's a real burden on your children if that happens to you, because they're trying to sort all this stuff out. And the process of that, a lot of money gets lost. It's interesting, there's, I get an email about once a year that says, hey, do you have you lost money in the state of Texas? And there's a whole place you can go. There's a whole registry in Texas of just lost accounts that they don't know who the money belongs to. Somebody has died. There's just an account sitting somewhere.
A lot of times they know who it belongs to. You don't know.
Yeah, right. Yeah. And so this is a real kind of, nobody wants to deal with it. And again, when I try to do estate planning with my wife, she just hates it because she just doesn't want to deal with the mortality issue, right? She just doesn't want to think about life without me in it because I'm just that good. I
don't know.
But I'm going to make you start doing interpretive dance here in a second.
Good luck.
But no, she just doesn't want to deal with the mortality issue, right? She just doesn't want to think about that. It's not pleasant, but it's something you kind of have to do because there's a lot more at stake than just losing your spouse. You can also lose a whole lot of money in that process.
Yeah, and I think one of the main things you mentioned at the beginning, I think people kind of struggle understanding what the role of an advisor is just to begin with. And, many times that we visit with people, they think, oh, it's just about money management. And that's, while it's a very big component of what we do, there are so many other things that are associated with it. And, if I'm talking to somebody, I usually say, well, think of anything that has to do with money. And they're like, what do you mean? I'm like, anything. You buy a car. You have a big decision to make. You want to know how much you can spend on X. Something has changed. You have a life-changing event. It may be you're changing jobs. You want to move out of state. It's somebody who can be a resource, an advocate that can actually look over your shoulder and say, hey, have you thought about doing it this way? Let's go update your financial plan, take a look and say, you may have thought that this is the best avenue, but in fact, if we pivot and go this path, it's actually more advantageous to you long-term because you can meet these other goals. But then we have to factor in the taxation aspect of it. Lance is more specifically talking about taking an inventory of assets, having an understanding of where things are, understanding if beneficiaries are set up. We see a lot of people that have done estate plans. Now, I would say there is an overwhelming amount of people that have just neglected it altogether for the reason you just mentioned.
Yep.
Just like life insurance, nobody wants to address their mortality. And it's unfortunate, and sometimes it's the cost. They're like, well, I'm not going to, you see how much a will is? I'm not paying that. I'm like, man, trust me, please do not let that deter you, because what you will do to your heirs and the funds after you're gone, if it's not done properly, is going to be much more costly than you spending, several $100s or several $1,000s to get something done. It's going to be astronomical compared to that. Mm-hmm. And then the heartache, the pain, you already have somebody who's, probably not in the best emotional state,
right? Because
you've just lost a loved one, and then they have to go and do all this extra work. Right. And so, one thing I think that, to keep in mind is that is what an advisor should be doing. They should be looking over, is the estate plan done? Has it been implemented? I mean, I talk to people too, like, oh yeah, I got this stuff. Well, what does it look like? How are your accounts supposed to be registered? A good attorney is going to tell you exactly what to do. They're going to give you a game plan, and then your advisor should work with them to make sure that game plan is actually executed properly. And that's the other part, is you have a lot of really expensive paper sitting out there, Lance, that has never been done, right? All the paperwork's been done, but they never actually physically implemented it by either updating beneficiaries, changing the accounts that they have. I've seen people create trust, limited partnerships, and then actually never use them properly, or just use them at all.
Yeah, and look, there's a comment in the chat talking about, you can go online and get a will done for like $50, and that's absolutely right. And there's some really good online tools if you don't have any assets to speak of, right? Yeah. Like, if you just got your house and a mortgage and a car in the driveway and a couple of $1,000s in the bank, just go online and just do a $50 will. That'll work just fine. There's nothing wrong with that. And what that'll just ensure is that it says, okay, when I pass away, everything goes to my wife and my kids, and this is how it's done. Very easy, right? And that will certainly solve the issue for that. But once you start building and accruing some actual wealth, there's a whole lot more that goes into it. And like in this particular case, once you get above certain basically estate transfer limits, what is that now?
13.99 million. So if you're married, that's per individual. So it goes up to 28 million. Now, talks if this current tax code goes away, looks like they're going to do all they can to make this permanent or change, but hopefully not revert back. And if it reverts back, that'd go down to about 5 million plus, they're going to put a cost of living adjustment on it, probably closer to 7 or 8. So some people who don't have estate tax problems now, if this tax code does expire, they could.
Yep.
Now, we're talking about a small percentage of the population.
Sure.
But it's out there.
Right. But again, if you start getting trapped up, into, I'll tell you another thing that I see a lot, Danny, and it's unfortunate, is I've seen more families broken up over the money when somebody passes away because it wasn't documented that, this is what happens, this is where it goes, this is who gets what. And then, of course, there's the whole family infighting over, somebody did this, somebody did that. I just had a case recently where the mother passed away, and apparently one of the children had basically just been siphoning all of her mother's money out of her accounts, and then the other siblings knew nothing about it. And so this has now evolved into lawsuits between siblings, and nobody's talking. I mean, it's and it wasn't that. And the sad thing was, it was not that much money. It was like $30,000, right, altogether. It wasn't that much, but you've now destroyed the relationship between. It's the principle, and you've now destroyed the relationship. None of the families talking to each other anymore.
Yeah, but that seems like that there's probably a bad actor, right?
Oh, there was a bad actor. Yeah, absolutely.
Yeah.
But again, those are the things that can happen, and this is why really good estate plans and also too, Danny, one thing that you talk about a lot and Richard talks about a lot is actually sitting down with your kids and saying, this is what we have in place. This is what's going to happen. So when I pass away and when your mom passes away, this is what to expect, right? And don't leave it just a surprise. Let them know where all these documents are, where the lists are, where the accountant's name is, all those type of things. So they know where to go to get this stuff, but they already have a good expectation of what to expect when that time eventually comes.
Yeah, you need to create a cheat sheet. I mean, you really need to create something. Put it in your safe, put it in a safe place that you can keep it, and say, hey, in the event of my demise, right? I've seen people go as far as writing their obituary. Like, hey, number one, they may not want somebody else to tell them what they really think about them. So they write it themselves.
Yep.
Or a big portion of it. Here's what I expect for a funeral or what I would like. But going and taking that inventory and knowing where everything is. Another thing is, online passcodes. A lot of people don't have that, so they don't even know where to go once you get there. So knowing exactly what to put down, I think, is really important. There's a lot of cheat sheets that can show you just kind of here's what you should be writing down. Here's how you need to store it. Here's what people need to know. But that will, whoever that was online, that is exactly right. You can go online will, go to Trust and Will. We like them, $200 for a simple will. If you want to trust, it's a little bit more. I think that people are oversold on trust a lot of times. They don't understand exactly why they would use them or what they're for. I think they're a great tool when used properly. But, at the end of the day, these are just basic things that need to be done. And so you don't have to go hire an expensive attorney for some of this stuff. If you just have minimal assets, you may not even, I think everybody needs a will, right? We want to, have everything tightened up. But a lot of other things we can avoid and actually supersede a will. And that's just beneficiary designations. That's the simple stuff.
Yeah, absolutely.
That is literally just going out and saying, okay, I have a 401k, I have a pension, I have these accounts here. Update your beneficiaries. You talk about other problems. There's actually an article I was reading the other day that there's an 89-year-old man passed away. He may not have been 89. In 1989, he had his beneficiary, added his girlfriend, then to be wife. Yep. They broke up. Man never married, never had kids.
Never changed it.
Never changed it. She's moved on, long moved on, married. His brothers think they're going to get his estate. Nope. His 401k, which had several $1 million in it, did not go to them.
Yeah, when I pass away, my kids get a treasure map. They're going to have to find it.
Oh, man.
Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Social Security Fairness Act dropped elements that reduced Social Security payments, retroactive to last year. What are you going to do with all that extra income? Our next Candid Coffee offers savvy Social Security planning if you were dinged by windfall and pension offsets. Saturday, March 29th, Richard Rosso and Danny Ratliff answer your questions about Social Security benefits and what the removal of WEP and GPO means for your retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com.
Attention Chevron employees and anyone else receiving or considering a company severance package. We know the process can be intimidating. What should you know to maximize your payout? Lump sum or pension annuity, retirement plan rollover or not? What about tax timing your severance? The fiduciary advisors at RIA Advisors can help you make the best decisions for your situation. Call us today at 855-742-7526. That's 855-742-PLAN. Or online at realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So interesting data coming out in the consumer confidence reports here just lately. Both University of Michigan as well as Consumer Confidence showed a fairly sharp downtick in consumer confidence. And so, at the surface you go, well, that's not good. Consumers are getting a lot less confident. But when you actually dig down into the numbers, what you find out is something actually kind of interesting is that when you look at the survey by political affiliation, Republicans, the Republican sampling has had a very sharp increase in confidence. If you're a Democrat, you have had a very sharp decrease in confidence. So it's no longer really about asking people questions about, well, how do you feel about the economy? It's really, how do you feel about the political environment, which has nothing to do with the economy. But I'm very excited, or I'm terrified about what's happening with government. There's virtually been a 90% either increase or decline. I mean, you look at the two lines of Republican and Democrat sentiment, and then they literally just go in other directions. It's quite fascinating. But it's really a sampling of psychology right now more than anything else. So you've got to set aside for the moment those consumer confidence indexes because they're heavily skewed by political affiliation right now. So again, they're not giving us really good information about the consumer confidence just in nature of the overall. But when we start digging into other data points like the Chicago Fed National Activity Index we talked about earlier this week. In fact, I'm going to touch on it in this weekend's newsletter. I'm going to show you some of the correlations that it has to employment, to consumer spending, those type of things. That has actually been getting weaker. And that does suggest what we've been talking about for a while, is that the economy is slowing down. We are seeing a slower rate of growth in the economy. Now, that's not recessionary, right? It just means that we're still returning back to normal levels of economic growth that are sustainable over time. We've had this very sharp increase in economic growth post the COVID pandemic because of all the money injected in the economy, and that's been coming out. So that lag effect of that extraction of capital is still working its way through the system. And now you layer on top of that government workers getting cut. That's going to. There's been a lot of the employment hiring that we've seen has been through government employment. That's getting cut. We're going to see, cuts to spending. That's going to work its way through the economy. We don't have another big spending bill on the horizon right now that's going to inject, 1.7 or $2 trillion into the economy. We don't have that on the horizon, at least not yet. So again, the ability for the economy, the natural growth rate for the economy is somewhere between 1.8 and 2%. So we're going to continue to we're about 2.3% in the latest report. So we're going to work our way back down towards that level. And we're seeing that in the other economic data. But for right now, there's so much skewing that's going on by political affiliation in both of the consumer confidence reports. You've kind of just got to set those aside for right now and not read a lot into those.
So what do those numbers look like, right? I mean, I think that's always a challenge when we look at any polls and surveys, like, well, where did you go? It's like sometimes some of these surveys, they make polls, especially around elections. Are
right.
Well, I was on Columbia University's campus. Well, okay, we know exactly how their affiliation is or voting.
Right.
So where do you find that data if somebody wants to dive into it?
Well, you get it from the University of Michigan, or you can go to the Census Bureau and dig it up. I mean, it's all there. I mean, they publish all this data. In fact, our data feeds that we use to create all of our reports, we have direct links to those data feeds, and so we can pull them down. It's like the NFIB report. There's a ton of stuff. When you see the NFIB report, you see the headline. The sentiment index of the small business index was up or down this month. Behind that is a tremendous amount of data. Well, how many people were applying for credit that had 100,000 in sales or 200,000 in sales or 300,000 sales? The size of the small business. What's their sentiment on outlook for employment? Do they expect jobs to increase employment, reduce employment? There's so much data behind those headlines that once you start digging down into it, you can really determine a lot about what's happening with the economy and really begin to make better predictions. And this is why we rely so much on a lot of that data in terms of our portfolio management, because you can tell from the trends of the data where inflation's going, where economic growth is headed, where employment is headed by looking at those underlying substrata of that data.
Yeah, and so if you actually break down, if you go to the conference board and break down the survey, that would likely suggest that there's probably more disinflation than inflation in a lot of ways, right? Because the people are going to be, if they're less confident, they're probably not spending as much money. And, Lance, I think some of that confidence may just stem around the uncertainty. We're waking up every morning and, you look and see a tweet at 3 a.m. that, oh, hey, new regulation, or, we're doing this now. Okay. And I think the market has a lot to digest. And so it can create that kind of paralysis by analysis for many people. And so they say, well, shoot, I don't know what to do. That could be a function of that as well, that I think is a challenge that a lot of people have to overcome.
Well, so here's a really good example of that, right? So when you take a look at these sentiment indexes, one of the things they measure is inflation expectations. So Danny, what do you expect inflation to be in the next year? What do you expect it to be in the next 5 years? What do you expect it to be in the next 10 years, right? And so those inflation expectations have surged a lot. Again, if you go back to the political deviation of that, Republicans expect inflation to go down. Democrats are expecting inflation to go spiking higher, even though during the entire Biden administration, when you had inflation, Democrats expected lower inflation, right? So again, theirs are just tied. Their view is just simply tied to who's in office, not to the actual economy.
Correct.
But here's the important part about that. What do you hear on television constantly, every day? When you turn on the media, what do you hear on television right now?
Tariffs are inflationary every day.
Eggs. Right?
Eggs.
Cost of eggs, cost of this, cost of that. Everything's going up. It's inflation, inflation, inflation. So if I'm flooding you with inflationary headlines every single day, and then I come ask you, Danny, where do you think inflation is going to be in the next year? What are you probably going to say?
Higher,
yeah. Right? Because that's all you've heard on television. So again, we create this self-fulfilling prophecy, so to speak, by all of the media driving these narratives, even though the underlying economic data. Take a look at jobs hard to get, right? Jobs, the amount of people saying that jobs are getting harder to get is rising really sharply. Take a look at expectations for income over the next year. That's falling sharply. Where's your outlook for economic growth? falling sharply. What's expectations for recession? Those are rising. None of those are inflationary at all. So if you looked at that data, if they were told, hey, this is what's going on with this data, now tell me where inflation is going to be in the next year, probably have a very different outlook if they didn't hear all these other headlines.
Well, and I think that's the key is they're looking at headlines. But I am talking to a lot of business owners that are really concerned, especially with tariffs, right? Especially if you have anything to deal with steel or aluminum.
Absolutely.
This is something they're going to have to pass on to consumers. And depending on your business line or your niche, that is going to be a problem.
Right. Well, again, the question is can you pass it on to consumers, right? And this is where tariffs are very interesting, and we've written a report about this recently, which is that tariffs aren't inflationary because what happens is the producer, just like you said, you just talked to the business owners, they're like, oh man, these tariffs are inflationary. Yeah, for them. The problem is they can't pass it on to the consumer, which is disinflationary. And so that's one of the other byproducts of all this and tariffs is where does it impact the business owners? Like, well, I can't produce anymore because I can't sell it, and then you get a downturn economically, right?
Yeah, but how do you flip that switch as well? Because now you have businesses that are hurting, right? So the sentiment, it gets worse, and then if they're laying off people saying, "Hey, I can't hire," we're already seeing other layoffs. Then you do get that self-fulfilling prophecy, and maybe you push yourself into a recession.
Yeah. Absolutely. And this is what we saw in 2018, 2019 as well. Remember, in 2018, Fed was trying to hike rates. We had high interest rates at fairly high levels, and you had a 20% decline because we were in the middle of a trade war with China at that point.
Yeah. Well, I think that's one thing, though, that, there's so much information coming out, and we do get that paralysis by analysis where we feel like, oh, man, like I've got a lot of emails and calls recently that are saying, I just don't feel like there's anything that's going to make this market go up. And, why are we still invested in equities, or why do we still have an allocation towards it? What are we off from highs right now, Lance?
Like 3.5%.
Yeah. And so we're already seeing that. And it's funny because I feel like our short-term memory has really shrunk in a lot of ways because we get so much information. It used to be where, I actually saw a report. This guy, he did a study on himself where he got off of all devices for like 7 weeks. Mm-hmm. And he said that he did a memory test. He's like 50th percentile. When he was done, and he went and they retested him like 7 weeks later, he's like top 99% for memory because we have so much information bombarding us. But everybody forgets we had a 10% decline in July. Then look what happened.
Right.
We had another decline in April and May of last year. Each and every year we should have some type of volatility. Now, it doesn't mean we need to pull the rug out from a portfolio because the market does so many different head fakes. I mean, if you pull up a chart of just SPY, you can see it. Mm-hmm. And so I think understanding that there has to be some type of discipline associated with an investment strategy. And we don't want to get all the way in or all the way out. And in fact, we have clients that do that, and I can look at their long-term returns. They're actually lower because we get out and we get back in at the absolute wrong times.
Right. Well, again, that's psychology, that's behavior. Michael Liebowitz I've written tons of articles on psychology behavior before. Mike just wrote one yesterday.
I thought it was out today.
Today. Sorry, it's on the website today. Michael wrote an article about behavioral investing today. These are really important. We write these more for ourselves than we do for you, but it's a really good read if you want it. But it's to remind us of those behavioral mistakes that we repeatedly make with our money by allowing emotions to dictate investment strategy. So anyway, that's on the this is on the website now. While you're here, be sure and like and subscribe to the channel. We appreciate it very much. And I'll be back tomorrow with Michael Liebowitz to talk about upcoming inflation numbers on Friday. We got that PCE report coming out. What does that mean for rates? Bonds have been killing it this year. We'll talk about what's going on that as well. That's all we're coming up with Michael Liebowitz tomorrow on the next edition of the Real Investment Show. Have a great day.